Hey, welcome back to the show. It's the 9th of April. Holy cow, what a day. Trump caves again, caves to the pressure. You know, bank CEOs, hedge fund CEOs, billionaires alike, maybe the Fed chair. Come on, you got to stop this market turmoil, man. You got to suspend these tariffs. You got to do something. You got to say something. We can't afford this. The basis trade loved by hedge funds, where they use the Treasury cash market against the Treasury futures market and make bets on how cash responds as we approach expiry for the futures by borrowing lots of money for the prime brokers who are banks, kind of exploded in the past 24 hours. That may have been one of the accelerating forces to get Trump to reverse. He's the boy that cried wolf, no? It's a little embarrassing. His word is becoming meaningless. Now, the underlying kind of thought is that he and his Treasury Secretary and other officials have heard from dozens and dozens of countries. So the number I've heard is 70. Well, I'll say, let's make a deal. Let's make a deal. Let's make a deal. And so until then, until we can make a deal, you gotta drop this. You can't go forward with these 25% tariffs. And so hopefully it's that. Hopefully it's, hey, can we just pause this thing so we can make a deal? And it's not him being afraid of the billionaire class, the hedge fund class, the banking class. Remember, this is really class warfare. It's Wall Street against Main Street. Main Street's been beaten up for 50 years, and Wall Street has benefited for 50 years. And so the implication of Trump's efforts were he was going to support the Main Street and screw Wall Street. In fact, he said as much just the other night. And now there seems to be perhaps a reversal. Again, we don't know, behind the scene conversation. Nonetheless, markets loved it, recovered nicely. Some record moves since 2008. The S&P 500 at 54.56, up 474 on the day. Not bad. The Dow Jones, 40,608, up 2,962. How you doing? This should follow through in Asia, in the Middle East, in Europe, the UK, overnight. We saw some backup of the US 10-year. And again, the US 10-year had rallied sharply in the face of this news from below 4% to up to 4.6% quickly on the basis of concerns over this carry trade. Oil rallies from its lows below $60. Gold up 3,099, up 109. Dollar index struggling a bit, still at 102.98, 103 level. Need to get back up above 104 to kind of recover where we were before the tariff announcement. Against the euro, 109.50 in a tight range there. Sterling, 128.20. Dollar yen, 147.51. So not too much movement in currencies. The real move was in stocks. Now, the other thing I want to quickly mention, so the 10% tariffs are going to remain apparently, and any tariffs above that are being put on suspension for 90 days, although he's doubled the tariffs on China. So U.S.-China going to war because Trump put tariffs on China. China reacted, we reacted. And so the quick move up on tariff percentages didn't take long between President Xi and President Trump. Meanwhile, let's keep in mind, this is all executive order stuff, right? This truly is the role of Congress. And you recall, executive orders can be stopped through the courts or through the U.S. Congress. There's rumblings in the Senate that the U.S. Senate is not happy with this idea. And so there could be legislation passed to, shut Trump down, to renegotiate tariffs, or to just say, reverse his executive order. And if Congress doesn't do it, the next president could do it. So these are executive orders he's putting through. And by the way, he's blowing out records on executive orders. I'm not a huge fan of the executive order. I don't believe it to be constitutional. I don't like it as a way of governance. It certainly helps speed things along. Although if he keeps doing this, next time Democrats have a president in office, guess what's going to happen with executive orders? Yes, exactly. All right, the other thing I want to mention real quickly, China, or someone from China, don't know who, maybe the Chinese government, put out a video, an AI video showing overweight Americans working in front of sewing machines, mocking the idea that we could reshore jobs from China to the United States. And a little silly, a little offensive. But what China's saying is, they were very overweight Americans. And so what's interesting to keep in mind when we think about reshoring manufacturing, it's a real challenge, is the model that Asian economies use for their workforces compared to the model that could possibly be used here in the United States. The low-wage Asian primarily Chinese worker is quite compliant, quite willing to work in difficult conditions for long periods of times, to live, to sleep on the property of the corporation in dormitory style living in a way that Americans just will not put up with, of course. Not to mention that Chinese labor is still a fraction of the cost of American labor. And that applies to Vietnam and India, still Taiwan, not so much in South Korea and Japan, but still lower cost of production. So this is, again, a big road to hoe. And I support the tariffs. I've said many times, you can look at my past videos. And by the way, the videos I put out this past Sunday, I pretty much had this whole week action in the stock market. I think I did pretty well there when I checked the predictions. Anyway, so there's no denying that the cost of production is going to be higher in the US. The way we equilibrate that is, of course, to have tariffs up on stuff made in foreign countries with cheaper labor. This should have been done, of course, in the 1970s and 1980s. And then don't forget the manipulation of currencies. The valuation of a currency pair determines the value of exports and imports for a given country. And the way you can help exports and reduce imports as a nation is to allow your currency to depreciate. That's something that the Asian economies are well versed in. And of course, for most of the past 50, 60 years, China has pegged their currency to the US dollar. And by pegging the currency to the US dollar, they have to manipulate their money markets domestically and manage the foreign exchange market closely. But what they do is they maintain the labor cost advantage they have over American workers. So that never changes. It's through the exchange rate that we change the value of a good or service in terms of imports and exports. And when we depreciate the currency, allow the dollar to weaken, that will make our exports less expensive and imports more expensive, therefore causing a substitution effect and helping to reverse trade deficits towards trade balance and possibly trade surplus. That's what Asian economies have done for decades and decades. Anyway, I'm not a fan of Trump's wishy-washiness on any policies. He does this regularly. He blusters and then he pulls back. He blusters some more and then he pulls back. I think his word is going to be weakened. I think world leaders are going to kind of chuckle behind the scenes at this. Some can interpret this as caving in. And some will interpret this as caving into the billionaire class, to the hedge fund world, to the financial world, to the banking world. It may be to stave off a financial crisis, but eventually we're going to have to let markets work one time. Markets have got to clear. All these hedge funds, billionaires, banks, they take financial risk just like you and I do. They have to manage their financial risk. That they were caught by surprise that Trump was imposing these tariffs after talking about it for years, and last week talking about it, here they come, here they come, here they come. And then, of course, we have to remind ourselves these massive swings are not human beings. These are algorithmic trading models that are whipping these markets back and forth. All right, that's all I have for you right now. Always try to buy American.